Hi, I'm Rick Rule, and you're watching Market 1 Minute. I'm here with Lukas Lundin. Good morning, Lukas. How are you?
Good morning, Rick. Nice to be here.
In preparing for this interview, it occurred to me I've done business with the Lundin family now since 1975, through 3 generations. Given your contributions to the mining industry and, of course, the wealth of Sprott clients, I want to begin by thanking you for a great ride.
Thank you very much. It's been a very enjoyable ride, and I hope it's just the beginning.
I want to start in this interview by talking about the success that you and your family, your brother and your sons, and of course your father, had over 40 years. And what sets the Lundins apart? Why is it in a town like Vancouver, where the expectation among promoters is failure, how is it that you've succeeded? Is it part of the Lundin culture? What is different? What has made you people successful while 95% of your competitors have failed?
I think, talking about the competitor a bit, they haven't failed. It's just a tough business to get through the gate, and I think we have been very persistent. And we looked at quite large assets, and there's no instant success in this business. It takes us, to get a deal done and get it going, and it could take anything from 5 to 10 years. You have to stick with your deals and be able to finance them through highs and lows. And of course, the failure rate in this business is quite high because not many of the prospects we have become mines. So it's very good to have a good team, and luckily enough, for the last 40 years, we've been able to surround ourselves with good people that we trust, and we've been able to build. And I think persistence is the biggest.
Those are good answers, but they're so charitable that I think they might be incorrect. So let's go a little bit deeper. When I was in university, admittedly a long time ago, before your sons were born, I was taught that 1 in 3,000 anomalies becomes a mine. I'm interested that in the starts, if you will, if the attempts that the Lundin family, if you look back at the attempts that you've had, probably 1 in 20 of your exploration efforts have ended up by way of successes. What explains a 2 or 3 standard deviation in result?
I think 2 standard is exactly right. 1 in 20 is probably a mine, but is be able to reinvent yourself quite quickly. So if this doesn't work, learn from the mistakes and move forward. I think it's very important to be quite agile. If you get stuck in the same project too long, it's not going to move forward, and you spend a lot of money on it. It's very important to understand to cut your losses and move to the next one. And I think that's what happens to a lot of prospectors and geologists. They're internal optimists, and those juniors are usually run by people like that, who are very important for us in our industry, but they never know where to stop. They think it's the next step's going to help them, and it just becomes a failure over time.
That's a very perceptive answer. We'll have time to deal with your failures later in this interview, which I'm sure you're looking forward to.
Oh, for sure.
One of the things that has always interested me about the Lundins, since getting to know your father, way back in the middle of the 70s, is that you have always focused on size deposits. My own perception, of course, probably shaped by my experience with your father, is that everything that can go wrong with a small deposit can go wrong with a big deposit, but a small deposit can never make you big money. Would you suggest that this focus on size is one of the things that's really contributed to your group's success?
Yeah, probably. Size is very important because at the end of the day, we started off with smaller assets. When I came to Canada in 1989, and about East Mac Gold Mines, you were a shareholder.
I do.
And we had America Girl, and we had the Kirkland Lake tailing deposits, which were smaller size mines. I think America was 900,000 ounces. And they became very, very difficult projects. Over time, we got them built, and we were able to sell them to my friend Ross Speedy. But there's a lot of work, and I learned very quickly, we were really spinning our wheels and not making much money. So from there on, we looked at bigger assets, and my father always liked bigger assets also.
I was going to say, before I knew your father, but back when I just sort of studied some of his successes, he first came to my attention with Gulfstream, which was, of course, one of the biggest ones that you've ever described.
Yeah.
Would you say that his subsequent willingness to consider small deposits, and you'll understand where I'm going with this question in a minute, would you think that that has to do with the market conditions that existed at the time, or do you think it genuinely had his interest?
I think it's a combination of market conditions and time. In some markets, when the market's very active, you get small deposits, everything goes through the gate. But you know, in the tougher times, you could really have to have substantial assets to survive the high and lows.
One of the things that I've always enjoyed about the Lundin family, your grandfather, yourself, your brother, and I hope your sons over time, is their willingness to understand that the capital markets are a source of capital, not a source of wisdom. What I've liked about the Lundins is that irrespective of what was popular in the market at any point in time, in other words, what you could have raised money with, you very much chose places that you wanted to invest your own money and allowed the markets to become your partners. You didn't, at least in my opinion, you weren't driven by the market so much as by the opportunity. Is that a correct perception?
I guess correct perception, because you know, to get opportunities, you have to be in a down market. You know, so to get the good opportunities, it's easier said than done. You know, if I have access to some capital, it's easier because then you know you get opportunities in a market that's quite frosty. You know, it's very tough to get opportunities because people are going to pay probably more than we think they're worth. So you know, you have to concentrate, counter cycle a little bit to make it work.
The excuse that people give me in interviews like these, or else when they're trying to separate me from my check, is that they do what's popular with the market because it lowers their cost of capital. What you have been able to do, both in terms of pursuing early stage opportunities where the value wasn't easy to perceive on the street, or go into countries, I'm thinking, God, where all have we been together? Syria, Sudan, Congo, New Guinea. Certainly you didn't have the experience of perception on your side in terms of cost of capital. How did the Lundin family access capital at a reasonable cost to take on those very large exploration commitments in unpalatable, or at least ostensibly unpalatable countries? What was your competitive advantage in terms of lowering your cost of capital?
I think competitive, I said we had big appetite for risk. And you know, once you acquired assets, you know, if they're good assets, you're able to finance them. The trick is to be able to take that decision to be able to acquire the assets, and then on the back of that, trying to finance them. You know, so appetite for risk-taking in the early days was quite big, you know, because most people probably go in and say, you know, we have the money in the bank, and then we acquire the assets. We acquired the assets first, and then got the money in the bank.
I'm still interested in how you can afford and why you would choose commodities that weren't popular and jurisdictions that weren't popular and risk levels that the street might have, before you explained the opportunity, thought unpalatable.
I think, you know, first we always put our own money into. We like to be, you know, major shareholders, because we're going to work those assets. We might as well be one of the large shareholders in the vehicle, because at the end of the day it's a lot of work, and to spread ourselves too thin in too many different deals makes no sense to me, because at the end of the day you make your money on the deals that go through the gate, and you have to have a big chunk of stock. If you spend too much time on chasing too many deals, you know, you get too diluted. So we're trying to be focused on what we do.
So Lukas, as I review 40 years experience with Lundin family, I noticed that you, and this is a very broad generalization, you started off with exploration, even rank exploration, prospect generation.
Correct.
You moved to acquiring projects that had major unanswered questions, and we'll call that development. You drilled off deposits and then sold them to other people, talking about things like Bajo de la Lumbrera, things like that. And now with Lundin Mining and with Lundin Petroleum in particular, you've chosen to become, and you've exhibited success in operating. I'm interested in the progression of the opportunities for investment that you look at, from exploration to development to production.
I mean, in the early days, you know, don't forget we had no money. You know, so you have to start somewhere. I mean, the best thing early days is we had the right people, we backed the right people, and at the same time, we had no access to capital. So the easiest way to start was to pick up exploration acres and trying to make something out of it. You know, Argentina gold is a pure example of that. We picked up a lot of acres in Argentina, and lo and behold, we had a fantastic geologist called Patricio Jones, who was a very good exploration guy. We found Valadero from grassroots, which became one of the biggest operating gold mines in the world, and Barrick produced a million ounces a year. And that was by backing people in the early days also. We didn't have that much cash around, and as we succeed over time, we're able to make money and then be able to do bigger deals and be able to acquire producing assets. And I think today, you know, I see that we probably make more money consolidating the mid-sized mining space, trying to get bigger with Lundin Mining than selling it off. And you know, so it's a progression over time. And with Lundin Petroleum, we're very focused on Norway, and there we had very large success with the drill bit. First we acquired an assets, and then we've been very lucky finding some extremely big assets. So I think it's a progression as you come along. You know, you start here and then you move upwards in the food chain.
One of the lessons I think that the Lundins have to offer the investment community, but the mining industry in particular, is optimism. So often in the mining business, we're talking to a constituency that's a gold constituency and a real doom and gloom constituency.
Yeah.
One of the things that's always been at least comic relief for me talking to the Lundins is that although you're in the gold business, you're not pervaded by pessimism, that you're in fact optimistic. And for most of your business, the zinc business, the copper business, the oil business, an expanding world is better than a contracted world. Perhaps you could talk to me about optimism, and talk to me about optimism in two ways. The way you see the economy and society growing and how that impacts demand for your commodities, but also the optimism that's required to build billion-dollar businesses and take risks. So talk to me about the Lundin's advantage with regards to attitude and optimism.
I think it's optimism it's a question of taking opportunities, you know, and making decisions. And it's always a silver lining, you know. In the down market, you know, if you're an optimist, it's a good time to acquire assets. In an up market, you know, it's maybe a good time to sell assets, you know. So you can look at a down market, you know, this is a good time to be here. In an up market, it's maybe not a good time to be in a different phase in your business. So I think that's very important to be optimistic that way. And at the same time, you know, you know, if it's copper, gold, or silver, we're not, you know, the important thing in our business is that we actually produce the commodity at as low cost as possible, because we have no control of the output. It's a bit of a crazy business, but today we have copper or gold, and one day it's $2 a pound, the next day it's $4 a pound, suddenly gold is $1,800 an ounce, now it's $13 an ounce, so it's very hard to predict that. I can't predict it. People try to predict it. We can't even predict base metals, but we should know what's consumed and what's produced. That's even hard for us. So the only thing we can focus on is keeping our costs low, you know, so we make sure we survive all the cycles. And, you know, and that you can tie into, you know, so we have low cost of production, you know, when the prices are high, maybe somebody is very interested in buying it. And if we have low cost on metals, maybe then the people that can't hang in there want to sell. So, you know, so I think, you know, everything has a silver lining to me.
So you would describe yourself really, in terms of an economic outlook, as agnostic.
Yeah.
You just look at things being cyclical.
Yeah, exactly. They are cyclical, and you have to get used to it.
Got it.
Yeah, and catch the cycles.
And you're probably less interested in people's opinion about world economic growth than where we are in a commodity price cycle.
Yeah, I think over world economic growth in general, you know, I'm quite optimistic. The world's going to grow, what, 2.5%, 3% this year? You know, so the world is growing. You know, at the same time, we became more efficient. So so the advanced world probably needs less metals, but the economies are growing, need more metals, and so so I see a need for all these base metals for a long, long time to come. You know, so that's not going to change, and the world is growing. And I think, you know, we read a lot about the world, ISA, and this horrible stuff that happened in Barcelona. But in general, the world is quite peaceful. You know, we don't have any wars going on. We don't have that much going on. You know, we have sensational terrorism, but the world in general is moving in the right direction.
Well, certainly in our lifetime, and you've seen this traveling in the third world as much as you have, the progression of wealth down the economic scale, as an example, has been fairly dramatic. Yeah. And it's worth noting that growth at the bottom of the demographic pyramid is more commodity intensive than growth at the top of the economic pyramid.
And it's growing, like, you know, if you go to, Africa, for example, if you go to Tanzania or Kenya, you know, the cities are booming. So it's moving. You know, it's coming. You know, we want to empower all these people to come up. You know, everybody wants to live like us, and you're not going to stop that. You know, you can't suddenly have our world being, we live a certain standard, and the other world living a different standard. And I mean, I'm a very strong believer we should all be equal over time, and I think that's going to come with education and growth.
So let's continue with that theme. You've described yourself as agnostic with regards to commodity pricing in one sense, that you're opportunistic in cycles. Your history and your family's history in terms of politics would suggest that you believe in political cycles too. Is it likely that you were willing to invest in places like Syria, Argentina, that may be a soft example, Congo, because you believed that those societies were at the bottom of one of their own cycles and could only improve?
And for us to invest in this country, the best help we can give them is to invest in big assets in the country and pay them taxes. And hopefully some of those taxes go back to infrastructure. You know, I can't control that because I don't want to become a country within a country. But I think for us to advance the world, it's quite important for us to be there to help them out.
I get the sense talking to you, and this is probably one of the secrets to your success, is that you're more deposit and opportunity driven than you are politically driven or commodity driven. That you're sort of agnostic as to the commodity and almost agnostic as to the politics of the country, provided that the opportunity justifies the risk.
Yeah, and then the country has to be, you know, can't be completely crazy. You know, we need rule of law. So, you know, so some kind. If there's no rule of law, it's very hard to do business. You know, like it's like the ex-Soviet Union and Russia. I mean, we've done business there, but you know, it's no court in place to do anything to protect you. Even in Congo, you have the Belgian law. And you have actually, they have a legal system that's semi-functional. So you have to have some kind of rule of law.
And do you think your challenge with regards to political risk increases with the size of the Lundin empire? In other words, does rule of law become more important when you move into producing assets than you were with exploration assets?
Yeah, I think so. The rule of law is quite important. I think it's always been important to us. Even when we did, in '91, we signed up in Argentina, Baja Lumbrera, you know, we negotiated a contract with the province of Catamarca and took them on the national government for 6 months. And that was a very, very good contract. And that due to that contract and due to the assets, we were able to sell that.
I want to sort of sum up the interview, and then I want to ask you to tell me what I forgot to ask. So be thinking about that. What I'm coming away with this understanding is that the Lundins have succeeded in capital markets because they were investors rather than merely consumers of capital. That your definitive advantage, I guess, has to do with persistence. You describe working for 2 decades to be an overnight success, and that you're opportunistic, you're bottoms up rather than top down driven. I know over time you've hired very good executives and you've backed them, and you're willing to go into jurisdictions or commodities in response to opportunity, not some sort of preconceived notion. Am I correct in identifying the franchise strengths of the Lundin family, or did I miss something?
No, I think you're correct. I think what we have to say is very exciting that we have the 3rd generation coming in. You have Adam here is going to come here and work with us in Vancouver. And the gold mine, we have one of my sons, Jack, is down there working at site on the portals. You know, so we see they coming in, and then my youngest son is working in the oil patch in Alberta. So you know, so I think we have a lot of strength in the family to bring the franchise forward. I think that's very exciting too.
And what do you tell these young men in terms of the Lundin franchise? What do you tell them about how to lower their cost of capital and continue to produce the wealth for the Lundin family and the Lundin et als like myself? How do you direct them?
I don't think we can just lead by example, you know, and then you have to learn. You know, I think they've been brought up in the system, so they understand what we're up to. I think we lead by examples, and we try to look at the good assets together, and you know, that's again tons and grades, and you know, be opportunistic. That's all we can do. And then at the same time, you know, they may, I don't know if they're going to manage company or become controlling shareholder, because they understand that we all understand that we're going to use the best people for the best jobs.
Despite my advanced years, Lukas, I look forward to investing with and helping fund the third generation of Lundins. And on behalf of Market One subscribers and Sprott clients, thank you for your efforts over 30 years.
Okay, thank you very much. Thank you, Eric.